2022, we couldn't get away from the term recession, and now as the market has climbed over 20%, technically putting it out of a bear market, we are hearing the warning bells from the bears and their narrative flipping from bearish to neutral. Let's look at some of the data that's coming through about recession fears in today's video, looking specifically at this recession fears data right here, the S&P after the CPI announcement, the fear and greed index for the stock markets, of course, Bitcoin, and the fear and greed index for cryptocurrencies. Make sure you have smashed up that like and subscribe to the channel. Guys, the top of the video description is our free economic report. It is coming out in a few hours. Make sure you do get on board with that, as a lot of this data is coming out in that email in much more detail. All right, let's crack on with today's video, looking at the recession fears that are down sharply. Now, I want to go through and look at this, looking at the peak of the recession. Basically, this is a fund manager survey. If I drop my face out of here, we've got Bank of America Global Research. Almost each of these times is picked the bottom. We have March 2009 with 80% of these fund managers saying that a recession was likely. We fast forward to April 2020, basically the peak of the pandemic. We had the low on the markets in March, and we have April 2020, again, nearly 80% of these fund managers expecting that a recession is likely. Fast forward again to November 2022, we had the bottom on the SP 500 so far as October 2022. You can see if we scroll out here, this was April and March was the bottom, October was the bottom, and this data came out for November here. They were looking at this as being the peak fear that we were going to see a recession, and now this has dropped off. Remember, this is from Bank of America. It's their global research on fund manager surveys here, and this is dropping off extremely sharply. We want to keep track of this to see how well it works this time round again. There's a lot of talk about recession, with many of the 2 and 10s looking at the yield curve inverting, which typically spells a recession, but we're starting to see the opposite happen. Now, I don't know whether we will get a recession or we won't, but the data is showing that we're probably not in the space for that at the moment. And even if we are, the markets may have already priced that in and are moving to the upside. This is looking at the macro, the longer term picture here. Now, we obviously have some technical resistance above it around this 4150 to 4200 points for the S&P, and this is going to spill over into Bitcoin and cryptocurrencies, potentially holding up those markets as well. But while we remain here in the short term, remember, we have to have multiple pictures here depending on how we are trading and investing, so that we don't get caught up in the emotional turmoil of the short term. We have a macro picture, and then we look at what's going on in the short term so we can understand what the news is trying to persuade us to do. At least in the short term, we could see a pullback here. We have been up for many months here on the S&P. October, November was up, December was a higher high and a higher low, even though it closed lower, because then we followed with January, again, a higher low, but it was an inside bar here with a lower top. And then February came through with a higher high and so far a higher low. So we've been up for 1, 2, 3. This is our 4th month now. We have to expect some sort of pullback eventually. And like I looked at earlier this month in our market analysis forecast for February on the S&P and on Bitcoin, which you can find a link to on the channel here. Just go back a couple of weeks. I'll leave them at the end of this video, so make sure you stick around. Basically, we're looking at this potentially being that time, February, maybe March, where we do get that short-term pullback, all right? But macro, looking at the macro environment here for our 18.6-year real estate and economic cycle, we're looking at this longer term, probably, potentially, taking out 4,800, and hopefully, in the case of Bitcoin, looking at higher prices above our 50K level, above the previous all-time high at 69K as well. I think that's a couple of years off at least, but overall, we'll probably have to expect the S&P to be going up if we're going to see Bitcoin also go up. So anyone calling for massive great recessions now and hoping that Bitcoin goes up to 70K, the two of those don't align. So let's go back and continue with the recession here. We've looked at April 2020, we've looked at November 2022. Let's look and see whether some of these other tops also worked in favor with the bottoms on the SP 500, the biggest market in the world. So let's start with this one here. We got 2016, early in the year. We can go back to 2016. Early in the year, there is a bottom right there. Pretty significant bottom, even though for us now, it doesn't look like it's significant. If you are playing in the market at that time, that is quite significant because you're just seeing several months down. It's put in a low, and this is the time where everyone is talking about we have to see a recession because X, Y, Z. It's exactly the same thing that's going on right now. Let's go back again. We've got 2011 and 2012. These are pretty significant tops here for the number of fund managers looking for a recession. Even though it's in the negatives, it was still pretty significant for that time. So the bottoms in the market are right here, 2011, and then on the way up, you can see into 2012, these smaller, shorter bottoms here. Because as the market began to climb, I guess everyone was expecting that we would get a double top again and for this market to plummet. Back in 2011 and 2012, it was severe times in the news headlines because during this period, there was a lot of turmoil in the financial markets, even though the market had bounced back over 100% from that bottom. And during this period as well, 2012, 2013, I vividly remember there was a lot of problems going on in Europe and how Greece had to default and the euro was going to get broken up. We don't hear about that anymore 10 years later, but that was the craziness that was going on in the markets at that time. So you can see the market going up and the buyers are stepping in and buying the market, yet the news was extremely negative, far more than what I think is going on right now. And so we can see that we've got these major three tops here with the majority of fund managers saying that recession is likely, yet we have also seen many of these tops when the fund managers are also expecting more of a potential recession compared to, say, what they had recently thought, and they've also called the bottoms in the S&P as well. So that's getting a snapshot of the macro picture with whether a recession is likely in the next 12 months. Now, another screenshot out of our newsletter this week, like I said, the link is in the top of the video description, absolutely free, massive one on macro stuff this week, so do go ahead and sign up to it, our free crypto and economic report there. Looking at the liquid assets per household, if I zoom this in a bit, you'll see that basically the households have gone up in liquid assets now, Q3 of 2022, so it's a quarter and a half old, but this is the latest data that we have, compared to Q4 of 2019, so pre-pandemic. This is before the pandemic when everything was rosy. And household income, you can see here liquid assets per household is up significantly, top 20, 60 to 80, 40 to 60, 20 to 40 is also up, and then the bottom 20% as well here, they're also up. The real labor income growth, you can see, although we're told the picture is a lot of people are not able to afford things, which is probably still true. I mean, a lot of things have gone up a lot, but the labor has also increased. So I'm not saying that just because the labor is increased that everyone should be able to afford everything and they're all complaining about it. I'm literally just looking at the data here that the bottom 25% in real labor income now, 2022, December, so a couple months ago, end of December, compared to December 2019, so pre-pandemic, the bottom 25% have had 11% increase in their real labor income. So that's the growth for the bottom 25%. If we look at the total, you can see it's just over 2%. If you can look at the 25 to 50%, the bottom end, that is, then you've got about 4 and a tiny bit percent there, so call it 4%. But over the board, everyone has gone up. The top end, the least amount, the bottom end, the most, but of course, the bottom end is earning the least as well, so it needs to go up faster than that. So following on from that macro data, also looking at the shorter term outlook for the market sentiment of the stock markets, we know that it's in extreme greed, or very, very close to that extreme greed reading here, now at 73. And previously, over the last week and month, it's been quite greedy. So short term, we're expecting a top. So just to repeat what's going on there, potentially short term, we'd expect a short term top. But longer term, the macro picture here, the months to the years, it's still looking bullish. A lot of the data here has not changed and is only improving. That's just the data, not my opinion. This is what is coming out of the survey. So it's crazy to believe that, or to hear it. But what can we do? This is just what is coming out right now, and we have to play the markets the best way we see fit. If we don't want to take this data in or use it as part of our own analysis and how we're going to invest, then that's upon us, and hopefully we still make money at the end of the day, or at least protect our own money, whatever we've invested into the market. So finally onto Bitcoin, and we've had a little bounce in BTC over the last 24 hours. We had the CPI data come out. Inflation is dropping. It didn't meet the expectation. The expectation was 6.2%. So analysts were looking for 6.2%. The data came out at 6.4%, but previous data readings were at 6.5%. So although we've dropped from what we were last month, we were still higher than what the analysts were expecting. And so that's led to short-term volatility like we saw recently in the S&P over the last 24 hours. We had a huge spike to the upside. We can go to a shorter term time frame. We can see that we spiked up and down and then basically closed above what we saw from the beginning of the day. Same sort of deal here for BTC. We closed up and broke the daily trend top. However, we're still below all of the previous resistance levels, basically where the market began to break down, and that price is at 22,300 on BTC. So short term, for this market to regain its bullishness and potentially hold out here like we were looking at for February, to basically track sideways for this period while we wait it out and see what happens next, we want to see it get back above 22,300. This doesn't mean that we won't see any sort of swings up and down. Maybe we'll get some more opportunities to buy under 22K, but that's essentially what the bulls want to see. For the bears, you want to see a rejection here at 22,000 and then drop pretty quickly and break below 21,300, because we still have this area to overcome for the bears to get back underneath that $20,000 level. So overall, Bitcoin is still holding up relatively well. This is still looking like we are tracking sideways. I'm hoping that we get a little bit more of a downside here, hopefully to around 19 or 20K. Nice, easy place to be buying up more Bitcoin. But at the end of the day, you do you. Whatever works well with your plan, let me know in the comment section down below. And if you haven't already, make sure you sign up to the newsletter. I've mentioned that the third time in the video because it's an absolute massive one. We're going into more detail about the transitional period of Bitcoin right now. End of a bear, start of a bull. It all comes down to the charts and what the next signals are, what those next breakout, those macro breakout levels are. That will determine, are we in this transitional period and we're about to break out, or we're heading down further. Check it out in today's free crypto and economic report newsletter. Link is in the top of the video description for that. Like and subscribe. I'll see you guys back here at the next video. Until then, peace out.